All right, welcome to Talk Tickers. We dive straight into the numbers that move markets. And today that means a deep dive into the Celsius Holdings first quarter 2025 earnings call. There are some, let's say, interesting cross currents here.
Yeah, indeed. I mean, the headline numbers show revenue at $329.3 million, which is actually a 7% decrease compared to last year, same period.
Okay, decrease, but what else?
Well, drilling down a bit, adjusted EBITDA was $69.7 million. Pretty healthy margin there, 21.2%. And maybe surprisingly, the gross margin actually expanded, went up to 52.3%.
Expanded how much?
By 110 basis points. So, yeah, a little over 1 percentage point increase.
Huh. Okay, that margin expansion with revenue dipping, that definitely raises an eyebrow, right? What's the story there?
Well, it really boils down to efficiencies, sourcing raw materials, packaging. They seem to have found some savings. For the core Celsius business, they sound pretty confident they can keep that gross margin around the 50% mark, at least for the near term.
And things like aluminum prices. Any worries there?
They said, interestingly, that aluminum prices aren't a major headache right now, but potential future tariffs. That's, a longer-term uncertainty they're watching.
Okay. Let's dig into that revenue decline a bit more. 7%. That's not insignificant. What were the main headwinds?
Right. So there were a few things. First, slowed velocity. Products just not selling off shelves quite as fast in Q1.
Velocity slowdown. Got it. What else?
The timing and the structure of their incentive program for U.S. distributors, that played a part. Also, an increase in their spending on retail promotions. More deals out there.
Promotions. Makes sense.
And importantly, they were comparing against, a very strong Q1 in 2024. That's when they had the big nationwide launch of Celsius Essentials, plus a lot of promo activity then too. So it's just a tough comparison they were lapping,
Right. So a combination of factors making it look challenging on the revenue side this quarter. Now, you mentioned a bright spot internationally. How did that look?
Yeah, absolutely. International revenue saw a pretty significant jump, 41% growth.
41%? Wow.
Yeah, reached $22.8 million. And this growth is coming from, both their established markets and the newer expansions. Places like the UK, Ireland, France, Australia, New Zealand, they sound, cautiously pleased with the progress. And they expect the segment to keep growing.
Okay, good momentum there. Turning back to the core market, the U.S., how are they holding up? Market share.
So in the U.S., for the 13 weeks ending March 30th, Celsius held a 10.9% dollar share.
10.9. How does that compare?
Well, they basically held steady, which is pretty good considering, the challenging consumer environment, more competition, and competitors playing with pricing.
Right. Holding steady is maybe a win in this climate.
Exactly. Their strategy seems focused on strengthening that core Celsius brand, boosting that sales velocity we talked about earlier, and getting into more stores, more presence through innovation and marketing.
So more shelf space coming.
That's the plan. They expect to gain more shelf space in Q2 and Q3, driven by new flavors, right? Celsius Supply, Retrov, Mango Lemonade, getting those out there should help.
And are they actually getting more items per store?
Yeah, the data shows the average items selling per store for the Celsius brand family increased by about 4.1 items in key channels. And remember, these gains this year are happening after the strongest shelf reset cycle they've ever had last year. So building on strength.
Sounds like new products are really key then. What else is new on the innovation front?
Oh, they've been busy. Q1 saw new flavors in their core Vibe and Essentials lines, and they really expanded their multi-pack offerings. Those are becoming a big chunk of sales.
Multi-packs are big now, huh?
Yeah, like 28% and 55% of retail sales mix in different channel definitions. So yeah, significant. Plus, they jumped into a whole new category with Celsius Hydration.
Hydration, tell me more.
Zero sugar, zero caffeine electrolyte powder sticks. Competing in that hydration powder market now.
Interesting move. And where else are they popping up? Distribution wins.
Yeah, making notable progress there too.
Really?
They expanded into over 1,800 Home Depot locations.
Home Depot, really?
Yep. And started a nationwide rollout in 18,000 Subway restaurants.
Subway, okay. That's big for food service.
Absolutely. Food service, mostly through their PepsiCo partnership, is now about 13.4% of North American sales. And they see more growth coming there.
Okay, let's shift focus to the consumer for a second. What big trends are they tapping into?
Well, the huge one is sugar-free. It's just dominant now. In 2024, dollar sales for sugar-free energy actually beat full sugar. And in Q1 this year, sugar-free functional drinks drove like 86% of the category's growth. Massive.
Wow. And Celsius and Alani are all sugar-free.
100%. So they're perfectly positioned for that trend. Plus, Celsius's whole live fit identity, that health focus, it seems to be really resonating.
Especially with certain demographics.
Yeah, they specifically mention female consumers. They see them as a large and frankly underserved segment in energy drinks. Celsius already has a strong position there, and adding Alani Nu just strengthens that connection.
Right. Alani, that acquisition just closed, didn't it? April 1st.
Correct. Closed April 1st. So now they have a second billion-dollar brand under their belt.
How did they pay for that?
It was a mix. About $900 million in debt, around $400 million in cash, and some stock, too.
Okay. And how are the two brands doing together? Market share?
Well, even just in Q1, the combined portfolio Celsius Holdings captured a 16.2% share. And importantly, they accounted for about 20% of the total dollar growth in the energy drink category. So driving growth.
Is there much overlap? Are they stealing sales from each other?
They said minimal cannibalization. They estimated only about 15% crossover between the consumer bases. The focus is really on leveraging the strengths of both. Alani Nu has that super loyal female base, right? And they see big opportunities to grow Alani Nu in channels like convenience stores, Amazon, and food service where maybe it wasn't as strong before.
So more details coming on Alani Nu's financials.
Yeah, they mentioned they're planning a public call specifically to discuss modeling, pro forma reviews, purchase accounting impacts, all the nitty-gritty for Alani Nu.
Got it. So putting this all together, Q1 revenue down, but margin up, international strong, Alani Nu added. What's their overall take? How are they feeling?
Look, they acknowledge the Q1 revenue headwinds, obviously. But they expressed optimism for Q2 improvement. They think the year-over-year comparisons get easier starting in June.
And the promotional spending?
Yeah, that hit Q1, and they expect it to impact Q2 as well. But the thinking is it provides a benefit in the back half of the year, builds momentum. And that strong gross profit performance definitely helped cushion some of that allowance impact, you know.
Makes sense. So priorities remain.
Pretty clear. Boosting velocity, reaching more households, expanding penetration, gaining market share, and operational efficiency, just executing. They sound confident they can navigate the, uncertain economic times.
All right, makes sense. Time for our favorite segment where we put on our speculative hats. Remember, folks, this is absolutely not financial advice, just some creative thinking. So given Celsius's push into new channels, Home Depot, Subway, and now bringing Alani Nu into the fold, what's an outrageous but plausible idea?
Okay, well, think about this. They're getting into all these different kinds of retail environments, right? Not just grocery or convenience. So you need ways to stand out there. An outrageous but plausible idea could be looking at companies that specialize in customized in-store coolers and displays.
Coolers, like the actual refrigerators.
Yeah, exactly. Especially if they start doing co-branded Celsius and Alani Nu coolers, maybe in smaller stores or unique locations like Home Depot checkouts or Subway counters. If they're serious about this broad distribution, the demand for the actual physical infrastructure customized, eye-catching coolers and displays could really ramp up.
Betting on the infrastructure build-out needed to support the brand expansion. I like it. It's definitely out there, but plausible.
That's the idea. Playing the physical footprint angle.
Okay, one more. International growth was strong, right? Especially Australia and New Zealand.
Right, 41% growth internationally. So building on that, maybe look at logistics or shipping companies, specifically ones with a really strong presence down in that Oceania region, Australia and New Zealand.
Betting on increased shipment volumes.
Yeah, if Celsius keeps expanding aggressively there, building that loyal base, someone's got to ship all those cans, right? Increased volume could benefit specific regional logistics players. Again, outrageous, but plausible if that international growth really takes off.
Interesting angles. Focus on the coolers and displays for channel expansion and logistics for international growth. Very creative. Okay, that wraps up our deep dive into the Celsius Holdings first quarter 2025 earnings call. We unpacked the key results, dug into their strategies, the Alani Nu integration, and tossed around a couple of energetic trade ideas.
Definitely a lot to chew on there. The revenue dip versus the margin expansion, the U.S. performance versus international.
So what stood out most to you listening? Any other angles you're considering? As always, we encourage you to do your own research, draw your own conclusions.
Absolutely. Crucial to do your homework.
Join us next time on Talk Tickers. We'll be dissecting another crucial earnings call. Until then, keep those tickers talking.